Thank you, Matt. Hi, everyone. I'm Jed Simon, the CEO and founder of FastPay. We are a next-generation lender based in Los Angeles, California. We're very excited to be here at Money 2020. I thought I'd begin by providing a bit of context into how FastPay fits into the fintech lending landscape. So as this graph illustrates, despite stabilization of the debt markets, banks are increasingly reticent to lend to small and medium-sized businesses. Banks have less capital and, quite frankly, less of an appetite to lend to these smaller borrowers. However, many of these businesses are just as creditworthy as they were in 2008. They just can't meet the more stringent and conservative standards for present-day bank loans. This market dislocation has created an opportunity for alternative lenders that can leverage data and technology to accurately assess the creditworthiness of borrowers in entirely new ways. Whereas only 15% of small business loan applicants are approved by banks, alternative lenders approve nearly 65% of these loans to these same SMBs. So 65% versus 15%. Where's the disconnect? Well, this disparity arises from one simple truism. It's that lending businesses are data businesses. Financial data can be categorized along two axes, data latency and data volume. Basically, how current is your data and how much of it can you access at any time? So historically, the only data available to lenders were financials and principal FICO scores. While this data set is informative for mature businesses, it fails to accommodate the dynamic profile of SMBs. About a decade ago, credit and debit card data flows became available for the first time to third-party lenders. This spawned the merchant cash advance industry. More recently, bank transaction data has been combined with the credit and debit flows to allow for a more sophisticated version of the merchant cash advance. Now, this new breed of MCA lenders has raised a ton of capital and has successfully processed an impressive volume of loans. But the data they're leveraging primarily applies to what's been called the Main Street B2C market. At FastPay, we have our eyes on a much bigger opportunity, the multi-trillion-dollar true B2B credit market, where businesses are invoicing other businesses. So by its very nature, the accounts receivable market is inherently industry-specific. What's needed is an entirely new data set based on industry-specific metrics to track business performance. This is FastPay's focus, using the data that actually indicates business success or failure as the primary credit criteria. So we've established a need to be industry-specific, and the industry we chose to start with is media. Now, why is that? Well, the media industry has three very attractive qualities: scale, demand, and opportunity. Let's talk first about scale. Global advertising is a $500 billion a year market, of which online comprises $100 billion. That's expected to double by 2017. And for the record, 15 years ago, that number was 0. So lending to a growing market is always easier than lending to a declining one. Now, demand. Is there a need? For digital media, media payment terms are among the longest of any industry, ranging from 60 days on the low end to 120 days plus on the higher end. The pain point is very acute. The biggest spenders in the industry pay their bills the slowest. Just recently, Procter & Gamble, the world's largest advertiser, slowed their payments to 75 days outstanding, while companies like InBev and Mondelez have moved to 120-day payment cycles. Even more, the vendors that service these large advertisers are young and underbanked. These forces create an amazing opportunity for a new class of lender. The collateral is backed by strong credits like Procter & Gamble with its $200 billion market cap, and their payments are highly predictable. Most importantly, what makes this collateral lendable is the robust data at its core, which provides FastPay the insight we need to originate and monitor our portfolio. With all that in mind, let's talk about FastPay. We founded the company in 2010 and started off with an enterprise asset-based lending product that leverages data to lend to media-focused SMBs. With this sophisticated ABL, we've managed to originate $200 million in loans across 7,500 transactions. Our data-driven approach has enabled us to accomplish something that I'm personally most proud of, and that's a loss rate just under 10 basis points. We're constantly developing new products, and if you're interested in learning more, check us out at gofastpay.com. Big thanks to Anil and Colette and his team for hosting this event. And if you'd like to speak with us more, or one of our team members, please look for us at kiosk number 60. Thank you.